None of this surprises me at all. It just, to me, seems that it's an acceleration by the countries who understand what's going on, and China leading the way with that. And I'm sure that's certainly painting the tape to Bill's point, to make it look like we're right at the cusp of some serious action in the gold market.
This video by Andy Schectman highlights critical developments that investors and market watchers should not overlook in the global gold market. A well-respected figure in the precious metals industry, Schectman discusses mixed feelings about technical analysis, the significant increase in gold trading volume on the Shanghai Metals Exchange, and its potential implications. The insights he offers are crucial for anyone interested in precious metals, as they reveal the underlying forces and shifts that may have profound effects on investments and global economics. Watch the video until the end and don't leave.
Yeah, I love Bill. He's one of my dear friends. He sent me that article, and you know, he's talking about technical analysis, and technical analysis is something that's challenging at best. And I have mixed feelings about technical analysis. You could say we have now broken out, as he said, above a 12-year cup and handle formation, an incredibly bullish formation. Nonetheless, I think a lot of it has to do with what we've seen in the Shanghai Metals Exchange over the past 2 months. And when you take the Shanghai Metals Exchange, which are contracts for immediate delivery of physical gold, along with the Shanghai Futures Exchange, their combined average daily volume over the past 2 months has increased more than 200%, which effectively makes the Shanghai Exchange, or the combined markets of the Metals Exchange and the Futures Exchange, the second largest gold trading market in the world, only second to the London Bullion Metals Association. And this is something that I think is worth contemplating. Are the Chinese really turning up the heat? There's been a lot of articles lately talking about the May contract and the deliveries and the shorting. And it's interesting, what I have taken away from it is that HSBC Bank, either for their house account or by proxy for one of their clients' accounts, has been shorting the price of gold, but we've seen tremendous amounts of exchange for physical move to China, and there is a Brinks facility in Hong Kong that is part of the COMEX ecosystem. And you know, a week ago Friday, we saw 243,000 ounces, over $571 million worth of gold, that was delivered in that direction. And anything that ends up going to Hong Kong, just about all of it to Hong Kong Brinks, is exchanged for physical. And we're seeing the price be knocked down on the Western exchanges, and then contracts bought in the OTC market for exchange for physical for delivery in Hong Kong. And the theory is that there are trucks picking that up and bringing it right over to the Shanghai Exchange, which is aiding in the delivery of metals like we're seeing here, up 200% in the past couple of months. You know, when we started talking about these things way back when, Dunnigan, in 2020, we talked about the rise of the others, these people that were bleeding dry the markets. But you can only do that so long before you start to get on the radar screen, so to speak. And they're finding more and more and more clever ways, in essence, to drain the Western system by suppressing the paper price and standing for delivery. Or in the case of the Shanghai Metals Exchange right now, pricing silver at $3 higher to slowly turn up the arbitrage heat. So Bill's point, to make it look like we're right at the cusp of some serious action in the gold market. It appears that way, at least by what's going on in Shanghai. Along with that, Egypt, Saudi Arabia, Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, all of these countries are repatriating their gold over the last 60 days as well from the New York Federal Reserve. And it's Senator Mooney, I believe, out of West Virginia, who not only has floated a bill to have the federal capital gains tax taken off of metals purchases, but or sales rather, but also he asked, you know, through the Freedom of Information Act, how many countries are repatriating their gold, and he was stonewalled. Information is coming out right now, but you know, to me, this all boils down to a broken glass. How do you put back together a broken glass? Well, how do you put back together the broken trust. And I think when you see massive accumulation of gold, when you see massive repatriation of gold at the highest level, it to me is a bigger issue of trust than just about anything else, or in this case, the lack of trust that I think is what we are witnessing, and the move away from accepting U.S. Treasuries as a place to park your money. And so I really do believe that oil and gold are being remonetized around the globe. They are being used as money and as settlement in place of U.S. Treasuries. And so the settling of all of these trades around the globe in local currencies, and then the excess reserves being parked in gold and oil instead of U.S. Treasuries, is what we are seeing. And this is why I think this leads to a situation where maybe hyperstagflation, where no one's going to want to buy our bonds. They don't trust us. Inflation is here to stay. It is continuing to, be fostered by the irresponsible spending and fiscal policy of the U.S. government, who's again accumulating over $1 trillion in debt every 100 days. And this is a situation that won't end well, where ultimately the Federal Reserve is the only one foolish enough to buy the treasuries. And as all of these countries shed treasuries and accumulate commodities which have no counterparty risk, which are being viewed as money around the globe, and in much of it anyway, it's a safer place to be. And so, yeah, I think that this is just beginning, and the technicals are starting to bear that out. And look, through so many years of naysayers and of counterintuitive action and suppression by the central banks, I understand why most of the people in the know would blow this off and say it's a nothing burger. But, I think one of these days, when you see the accumulation accelerate, when you see the action in Shanghai accelerate 200% in the last 2 months, when you see repatriation by very prominent central banks, including 2 of them that just joined the BRICS, all of these things accelerating and put together have a greater significance. So yeah, I'm inclined to believe that we are in the midst of a bull run here. How high it goes, I don't know. Some people are talking 2,700, 2,800, maybe even the psychological barrier of 3,000. But I do think that people who are waiting for a pullback, it's too late in the game to do that. I mean, it is, maybe. I mean, it seems that way to me. So instead, the better way to do it is to cost average. And if you have an amount to spend, instead of waiting for a pullback, divide it into 4 and buy every week or every 2 weeks, or increase your purchasing if you feel you have to. But waiting for that pullback could be something that keeps people waiting for a very long time. One of these days, the broken clock will be right, and the fundamentals just seem to be accelerating, Dunnigan. So I wouldn't think that's sound advice.
We are grateful for your interest in our insights into the gold market. Make sure you like and subscribe to our Precious Metals and Market Trends newsletter if you found this analysis useful. Keep up with the latest gold market news by liking, subscribing, and ringing the bell icon. Let us know what you think in the comments below. Watch the next video and stay informed.